Hi everybody, it's Chris from Serene Education with the 4 Majors Analysis Update for the 8th of March 2012. As per usual, going over the 4 majors this morning quickly, starting with Euro against US dollar, working our way through to the Japanese yen. So, in front of me, 4 time frames of the Euro US dollar. Weekly, you can quite clearly see that price over the previous week, very negative, after a lot of upside movement over a period of a couple months. And you can see that we had a pullback in this, and then a 61.8 fib continuation, failed to really carry on out with that extension. Last week's volume pretty much looking or sentiment looking very bearish indeed. As it stands at the moment now, very indecisive, going into our Thursday opening this morning. And back at these areas where we had price support, so back towards the 23.6 at the 13,1500 mark. And if you can find support around, if price could stay above this areas, then you could potentially see price finding a slight consolidation support here as we look at the dailies. So what's been happening on the daily, you can quite clearly see that price has been moving higher. However, we've had a massive pullback in the last week. As you can see, downside moves, especially this stuff that happened last week, bearish engulfing after price really finding a bit of resistance above it after over a number of period of days, not going any higher, and subsequently bearish engulfing, telling us there was no more upside movement on this, and we saw shorting opportunities arising. Swing highs, swing lows, you name it, we've had a swing higher, obviously a bounce, a lot of support through here at 1305, 1310. Major resistance through here and support in the previous month, and price has now moved towards that, broken this upside trend however 2 days ago, and on the trading session, Asian session, moving higher after yesterday's consolidation. This consolidation as we've moved lower towards this price support here, so very strong support area through here. Price needs to be trading through that in order to give us any indication that we should be seeing any further negativity in the market. CTC on our daily time frame is negative, however we still aren't trading through the 50 period moving average and this very strong support and resistance from previous. So got to see that happen, otherwise what we could see is a bounce with potentially price to take out this previous swing here at 13,2500. If that's the case, then we should see potentially further upside movement with a goal long term at likely to be 13,500. So the quicker we break through the support, the quicker we'll have a further downside trend. The longer price finds support above this area here, this prior area here, resistance and support, then there's more likely for a bounce to the upside. Intraday, let's have a look here. Quite clearly see that price has and is trading through the institution moving average on this time frame. If I draw my upswing, my uptrend, quite clearly see that's been breached in the past number of hours, as price has been making its way down to the downside. However, we've seen a nice little bounce here between, the 1310, 13.5. This area here is that very strong support and resistance level I mentioned to you again on the daily. So, got to put that in. It does help knowing when these areas are. Yes, price has been trading below, but when it's broken and closed, it's gone back down towards price support and resistance. And that was the case over here. Price broke below this very strong support, rallied to the downside to the institution moving average, and then we had a bounce, psychological bounce on that, and price moved higher. At this moment in time, we've had a break, and we're seeing price finding support on this very strong support and bouncing higher. If it fails to break above the institution moving average and fails to trade on the upper end of this trend line, then all we're seeing is a bearish consolidation occurring. So upside moving down. It failed. It needs to be trading above 13,200 above this trend line in order to give us an idea that we should be trading higher. As I mentioned, for trend direction to be breached, we need to see price trading above the previous swing to that. So in this case, we had swing low, swing low, swing low. On the downside support, we need to see price breaking this prior swing low here at 13,2500. In doing so, it'll be back up above this trend line and it has cancelled this downtrend for now, this intermediate downtrend. And by trading by 13.25 and the prior swing, it'll be trading by the institution moving average, and that means we should see further upside occurring. As it stands at the moment now, CTC is still in favor. We are still in a negative trend. However, for this trend to still be classified as negative, we need this 1310 to be trading below 1310, 1305. in the short term. Okay, and our hourly chart, RSI is well below and is heading back towards that 50. Notice as we've been in this downside trend, price is trading below the 50, okay, telling us we're in a negative trend. However, as we've hedged lower, you can see that RSI bottomed out, and as we got to the bottom here, or 1310 in particular, you can see that relative strength started to see a bit more buying taking place as we headed towards a psychological support, long-term support, and sure enough, you can see the bottom and then upside. Okay, as it stands at the moment, our price has just been going sideways, and you can see price is now testing a prior support, intraday support, as we speak, just below the 13,200 mark. It's trading above the 50 and the 20. Okay, not above the 50 yet on the RSI. Got to get above that. CTC is in our favor. Great. The only thing that's missing is RSI trading above 50, and we're trading above this prior strong intraday support and resistance level. So make sure that on the hourly we get a nice bullish engulfing above 13,200 would confirm that price is looking steady for upside movement, and we should be looking at ultimately 13,300 as our next potential target on this pair. If you want to, you can take a retracement, take the high to the low, the bounce here. You can see 23.6 is the place where we need to get above. So if you want to move this back up, the 23.6 here at 13, or make it 13,200. We'll definitely give you is where price needs to be trending above. Fail to do so would just be a pullback, a bearish consolidation against the major trend, which will be down. So got to be trading above 13,200. Otherwise, it's just null and void. Okay, very, very important. RSI is still below 50. We don't want to be pretty much buying into something where the sentiment is not genuinely there. We're still below the institution moving average. Remember that. Moving on to sterling against US dollar. Good old cable. Weekly. But slight hesitation going through this part now, the past couple of weeks, as we test the 50-period moving average, which happens to be coinciding with the institution moving above. Shooting star, exhaustion candle. That plays out on our daily, primarily because we are now testing the institution moving average. We have done so quite a lot in the past. We had a failure and we saw price bringing, retesting these prior lows here. Before we saw a bounce early in February, in early Jan to the upside. We had a first attempt failure, second attempt failure, third attempt failure, and then we had a breakout. That followed a fake out. This bearish candle here engulfing all of this upside movement, all those 2 prior days of price trading above the 15,900 mark, which we wanted price to find support at. It did so on 2 occasions. However, that failed to rally. Price failed to rally on that. Didn't open higher and progress higher. Over that, just bearish engulfing, cancelling out all this moves, and then moving to the downside. We saw 100% extension to the downside of that play out, back down to 100% of this initial move here, and now we've had a bounce. 61.8 is in play as we speak, so we want to see a resistance level at that area to confirm that price is just having a slight breather before we see further extensions to the downside. Otherwise, 15,700, as we all know, long term happens to be a very strong support and resistance level. Yes, price has actually traded below that on a number of occasions. However, if you look at it on a bigger time frame, 15,700 has been a very unique area because we've had price pausing at this area over a period of time. Look at that. Through most of November, December of last year, a lot of hesitation. Yes, price has been trading through it, but never once did it really close with momentum above that area. The further back I go, the more you can see consolidation. So this is a very, very strong psychological area. Notice on 2 occasions before we had price going to this area, okay, and not once did it actually. We've had this case of here before it actually closed lower. However, it didn't continue to the downside. We had this morning star bearish and bullish engulfing. The same thing here again. We had a bullish Arami at this area, and we saw bounce higher. So as it stands up now, we've seen a collective bounce. Are we going to see the same thing again? Price really rallying as we head back up towards the institution moving average, or 5,900, for yet again another attempt of these highs? Or are we going to see price failing at the 61.8, which is here roughly around the 1577 mark, before we see price reverting or reattempting these supports here at 15,700? As it stands at the moment now, daily range trading into this. We've had over the Asian session price testing those areas, and we've had a slight pullback since. Ideally, we want to see price trending above that. Gets above that, then we should be looking at 50. Gets above that, 38 and 23.6, and then back to 100, which will bring us to the 1500, which is the long-term support and resistance level here with the institution moving average. CTC is very much extended to the upside because we are still up, but we're in a bullish consolidation. Okay, we do need to see price trading and rallying above 15900 to give us any indication that long term we should be looking for further shorts. Longs. Okay, so as it stands at the moment now, if you want to just put all these areas of 15700, very strong support and resistance level on our bigger time frame, the daily. A lot of hesitation. Yes, we had some CTCs going red, however, we're still trending by the institution, which meant that we're still looking for favorable longs. And now for the first time, we're trading below that. So is that an idea of this just being a pull down before we see price making a reattempt of these lows? Notice here, this extension, we saw 100% play out after that pullback. Okay, now psychologically we had a bounce. We've had a lot of indecision candles. Look at these two here in particular. We've had 8 hours of very, very indecisive moves, and this morning Asian session we've seen price bouncing higher. However, we're still trading below the 200 period moving average as we speak on our 4 hour. If you draw a trend line in play, you'll notice that in this area, around this area, we're going to see price testing these highs here. So ideally what could happen is potential bounce or consolidation under here before we see a reattempt to the downside. We do need to see price trading above the 200 period moving average in the next couple of days. Our daily as we go into non-farm parallel tomorrow, above the 15800 to give us any idea that we now cancelled this downside trend, intermediate downside trade, and we should be looking for upside back up to 15800 and then ultimately way up here to the these highs roughly around the 159,600 for the foreseeable future. So as it stands now, CTC is still negative, yes, because we're still trading on a downside trend, swing lows dictating, and we're trading below all the moving averages on this time frame. Our hourly chart, which I use as my entry check signal, you can see quite clearly 50 period moving average acting as a clear ceiling level. RSI fell to actually break above 50 in that period, and the CTC very much in favor of further shorts. Same over here, we're trading below the institution moving average. RSI, yes, as we saw price testing these price supports at 15700 because it was a psychological very strong support and resistance level. We saw RSI or buying power sentiment creeping into this, and we've seen price moving higher. So here, reattempt of the prior low, RSI clearly moving to the upside. Okay, but not out of the woods. It has to be trading about 50. Got to be trading about 50 to give us clear indication this is positive. A positive trend, positive momentum building into this. Yes, the downside trend you can see quite clearly has been breached. Okay, but we're still not in that. We don't want to be trading. Look over here, for example, CTC was all in our favor. On that occasion, RSI had not closed above. Okay, very, very important. And if you look at these highs to the lows here, price had not closed above 50, the 50% retracement. Okay, a lot of hesitation through here, further hesitation, bearish engulfing at this area here, and we saw price reverting to the downside. We don't want to be caught into this. Okay, we don't want to be going long when there's actually no momentum to support that move. So it's the same thing over here. Hence the reason why I use RSI to confirm that. Get above 50, and if we're doing so, we should be starting a new trend. Ideally, should be trending above the prior swing. In this case, to be long-term positive, because we're still trading below the institution moving average. We're still negative intraday. Okay, yes, we're having consolidation, but it's still negative. We're consolidating against the major trend. Okay, for this to continue to be the downside, we do need to see 1700 breach very, very soon. So as it stands at the moment now, if you take these highs to here, let me just show you, take a retracement. So that'll be your start of your downside move to 1700. So the 15700. Notice a 23.6. A lot of resistance for a while. Then we had a breakout this morning, and now it's traded to the 38.2. So breach, trading higher with momentum. No wicks. A nice candle upside. Preferred more to the upside. However, 38.2 is in play now. 38.2 plus the trend line, okay, is in play. We do need to see both of those being breached. Support being found here above the 38.2, and then we'll look at 50 and 61.8. The 61.8 will take us back to this prior support or resistance. Okay, you can quite clearly see the breakout, the pullback at the underside of support, and the continuation lower. Same thing here. If we see price moving higher, finding resistance now intraday at this level, if price fails to rally above that, then we could see this is just a pullback a pullback, and then a continuation low back down to 15,700. So we're not out the water yet. Okay, and I don't think we'll get the RSI above 50 on our hourly until such time as we're trading above 15,800. US Swiss franc is the next one. Good old Swissy. Let's have a look at the weekly. Bullish engulf. Well, not bullish engulfing, but pretty much anchors on. We can see downside trend over here, for example, from the highs on the weekly. Swing low, and prices retesting those swing lows. So pretty much trying to, it's damn just to actually stay above or float above 9100. A lot of price support, then a little poke out, then we pretty almost like a tweezer bottom here. Prices trying its best. The US dollar news recently being favoring upside movement, and that's been playing out. CTC on this time frame is still very negative. We're still below the institution moving average, trading above both the smaller time frame averages 20 and 50. However, the institution moving average well above price here, capping it to the upside. So daily can see that momentum to the downside. 9110 acting as a very strong support and resistance level for quite some time, over a number of weeks. Recently through the latter part of January and into February. Then we had a nice break to the downside, a lot of momentum, 100% of that initial move pretty much favoring downside movement and pretty much getting that, and then we saw a nice bounce to the upside at 100%, bullish engulfing at 3 days of support, and then back up to 9110 would have been a good target level. That's broken higher now. It's found support in the past couple of days, and we've hedged higher. Past yesterday, pretty much also consolidating as we head towards that 50 period moving average, which happens to be the 9250, which happened to be prior resistance and support in the past on this level on the daily. Okay, swing high, and you can see price as we speak now in the European session open is tempting that downside trend now. Okay, so what we want to see from this pair, well, ideally if we can maintain or find support above the prior consolidation band here at 9115, then we could see a reattempt of the 50 period moving average or 9250 in the next couple days. Failing to see that, could see price pulling back to 9110, break and close lower than that area, as we see a failed momentum to the upside. We have seen a bounce. Ideally we'd like to see this a little bearish, a little consolidation bullish to the upside, but intraday we should start seeing potentially on our 4 hour, for example, see prices trading above the institution moving average for the first time. This is this bullish momentum starting to be factored in. Previously resistance, now for the first time hesitation, and then a momentum to the upside. This little failed move here on our 4 hour chart, just really being decisive, not trading lower than 38.2 pullback. So very short pullback as momentum was still favoring upside. Punched higher, closed higher. Yes, we're having a pullback now. That's bound to happen. A lot of indecision through just below 90.20 as we had the pullback. Now it's very important that price on our 4 hour found support or stays finding support above the institution moving average, because for the first time in as many months you can see that, well, in a couple of months we can see that the institution moving average is now being breached upside. So that's positive. Okay, if it's trading below the institution moving average, then it's negative. If it's trading above the institution, then it's positive. So we've got to see this as a positive line sign. Yes, we have a red area. It's confirming that we've seen consolidation. That's true because prices have been doing nothing for the past couple of days as we move sideways. Okay, so price needs to do now is to find support now at this prior resistance level. Okay, so you can make a nice thick 4 hour chart. Price has to remain above this 914 or 915 area. Very, very important, because if that's the case, then we can see momentum being built into this if we find more support, as long as it maintains these highs, and then we should see a kick higher. Okay, the US dollar has been gaining a lot of strength recently. Are we going to see the momentum playing through? We have non-farm payroll tomorrow. Are we going to get another month of positiveness that we saw in early Feb to really see that buying power coming in and to really move the market upside? Or are we going to see non-farm payroll figures coming out negative for us to see the US dollar sentiment dropping and all the other cross bears against it gaining strength in the next couple of months or for the remainder of this month? So it's very, very important. Non-farm payrolls, if it comes out tomorrow stronger like we did last month, then all it's going to do is going to start all the momentum like we saw previously, and we're going to have a nice bounce to the upside. Very, very important. Okay, so Got to maintain those 91.14 highs. Okay, so psychologically, draw these lines in. Okay, on our hourly, this is my, see for the first time, we're still, even though we're having the pullback, it's still positive, still above the 50 period moving average. Okay, even though we had a breach of this upside trend, high swings depicts upside movement, yes, we've been a breach, but it still hasn't closed below this 91.40. Okay, very strong support and resistance level. Notice the hourly, a lot of hesitation on this time frame. Look at all those wicks. Okay, this is where you got to be patient. Okay, don't jump into trades when you see pullbacks. Rather let price dictate that. Trading below the the two smaller time frames, not a problem. RSI is still not below the 50. So yes, as price has been heading higher, you can quite clearly see that RSI has started to diverge. Price is moving. RSI is getting lower as price has been moving higher. Great, fantastic. But the great beauty of this is we're still positive because we've broken above a prior resistance. So we have consolidation above a prior resistance. As long as price can find decent support at this level, then we like to see momentum being built into this. If it breaks lower and closes lower than this 914, then we should start looking for potential pullback areas. So if that's the case, this was our all-time low here that we saw on the 29th. To these highs, notice the 23.6 is where the 914 is. Okay, so that's the first one. If it breaks 23.6 then 91400, then we should be looking at 38.2 as our next target. RSI has to be trading below. Notice the CTC is in our favor, however RSI is still above 50. Okay, you can still see we're trading above a very strong support and resistance level. Got to see a bearish engulfing to the downside, resistance or pullback, then 38.2 will be our next target, followed by the 50, which will bring us back to the institution moving average. That's how I keep it simple, guys. Okay, we're not out of the woods yet. This is all bearish, however we're still above a very strong support and resistance level, and as long as it maintains that and still trading above the institution moving average, this is just a bullish consolidation pattern before we see further extensions to the upside. Last bit of the day is US dollar Japanese yen. Apologies for that. Weekly, very much still very negative. Look at that. I mean, look at this. This is crazy. And then, the beauty is we had lower swings on this weekly chart coming there all the way back from 2007. Not that you need to know, but you can see how much the US dollar has lost against the yen in as many years since 2007. But you'll notice that that trend line I just drew very quickly has been breached. Hallelujah. Okay, is that a good sign, bad sign? Well, good sign because we're starting to see a bit of US dollar bullishness in this pair. I quite clearly see a nice support through here. 7550 was the last port of call before we saw the Japanese government trying to intervene on two separate occasions, August of last year and November of last year. Price also breaking through a very strong support level, price support and resistance level at 80, which happened to be a very strong support through the most of last year in particular. Price pretty much ranged over here in this downside trend, and then we had a break, and then we had price ranging in a downside trend, and then we've had non-farm parallel figures first week of February just bounced, just made everything look absolutely fantastic. Here we go on the daily chart. You can quite clearly see here a lot of hesitation going into that news event. So we had Tuesday, Wednesday, Thursday, very indecisive. CTC was in our favor for downside movement. However, a lot of people were very uncertain to trade that because the last time price headed towards 75.50, we had intervention from the Japanese government. So intervention was everybody's lips. Yes, should we go short with the possibility of price being pulled against us? Not really worth it. However, that didn't really materialize as we had some fantastic figures for non-farm parallel at the beginning of last month, which really saw price moving higher, banging up. That started this whole bullish engulfing, pretty much a morning star if you take these all together. Price heading higher, breaking through a very strong resistance level. Yeah, it's 78, which happened to be a ceiling level for a long period of time, and the institution moving average. A lot of momentum. Look at that. That's buying sentiment straight through, saying no, we want to go higher. Not interested in the ceiling level, which happened to be here, straight through it. So momentum really shooting higher. Fantastic. Great. Is it going to give us that momentum? Yes, it did, and it rallied. If you take the lows here to the pullback below the institution moving average and the breakout, notice that 100% of this first start after the news would have been our target on our daily. Sure enough, it rallied into that, went straight past it, slight pullback, and then continued straight to 161.8, which takes it well overbought. We saw a bit of hesitation creeping in as price found support, and then another reattempt at 261 that failed to materialize, and then we saw price really coming unstuck in the past couple of days. However, still trading above 80.50. Okay, we have a nice little psychological bounce here now. Price is maintained above these two areas on the two previous pullbacks. As long as it does that, then we should see price hopefully building on that to go even higher. 261.8 would definitely be our next potential target on this pair. Okay, AT, as I mentioned, very strong price support and resistance for this pair. Look at that. Price gunning for it, pushing through, finding support and building onto it. Yes, it's pulled back since, but it's above it. Okay, as long as it maintains above 80 on our daily, then we're happy, because if you look at the weekly time frame, that 80 was very, 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 very strong support before. Okay, so psychologically we've broken above that. People are going, okay, great, we're above this area now, very strong support. Are we seeing more bullishness? Can we put more bullishness or build more bullish sentiment into this, and we can see price really heading higher to, at least on the weekly, way up here to 8,900 again? It's possible. I think it is possible. Okay, but we need to see price holding on to these highs. 4-hour chart, I'm putting my 80 in because I know psychologically that is our long-term support and resistance. As long as price maintains above this area, then we could see, if anything, if it does consolidate to the downside again, as long as it consolidates sideways above this, the institutional moving average will catch up with it, and then hopefully we can see momentum picking up on another day and pushing price higher. If you draw your trend line in, you can see quite clearly the price has pulled back just recently and tested these areas. If you look at the price swing from these highs over here, for example, swing lows depict downside trend, but we've seen a breach now. Okay, we've seen a pullback, and that pullback now, we found a bit of support. Now it's pushing higher. CTC, as you can quite clearly see on a 4-hour, very, very much blue. Okay, since the start, since the break of this institution moving out, you can see price is very much blue. We have our blue candle on our 4-hour. The previous 4 hours ago, great. That's telling us that momentum is starting to favor further upside movements, and you can see the 20 is still above the 50, which is above the 200. So price action is great. Our first port of call would be the price swing, which is not too far away at 81.50, and second port of call would be here at the 81.90. Apologies, that area, roughly around that area. Okay, so we want to see price really moving on that. Hourly charts, this is where I take all my trades from. Notice this pullback, we were trading below. Yes, great. A bigger pullback than expected, not a problem. We're still trading above that long-term support and resistance level, so we're seeing a major pullback against the overall upside trend, not a problem. We were trading below the institution moving average for a while. Price did not want to give away these gains. You can quite clearly see that price actually found support for a long period of time. Price actually could not and would not trade lower than 80.60. Okay, a lot of wicks, but price action just found support at the underside. It just told us that price was looking for a potential reattempt of these highs, because surely if it broken out the first time in the institution moving average, then we should have seen price pull back, which happens 90% of the time, and then price to continue to the downside. That failed, and we saw price pulling away, then pull back, bounce, failed to break below that again, a reattempt of those highs or the institution moving average, again back down to here. So 1, 2, 3, 4 failed attempts to go lower, just telling us that support is now clearly in favor, and we saw buying sentiment creeping back into it, and sure enough we should be on the upside of this. Okay, so as it stands at the moment now, as long as we can see this upside trend in play or keeping this, then we should see price pretty much moving back to these highs that we saw just recently at 91.90 to start with and higher. So that would be our second target. Ideally, if you're not into this trade, look for a close above 81.60. If not, look for a close above this 81.50 to see these areas back to the upside again as potential targets. That's it, guys. Hope you have a fantastic trading day. Be aware there's a lot of news today, both for interest rates announcement, the official bid rates for sterling as well as euro. Okay, sterling still at 0.5. Will we see a change? I doubt it. Euro was at 1.5, was brought down to 1 last month. Are we going to see any change back down to 0.5? Who knows? They're saying that it should be 1. I don't see it changing, but you never know with the market. It could come out with 0.5, removing it down to 0.75 particularly. It'll remain to be seen, but don't want to be trading around those news announcements, because there's going to be a lot of a lot of speculation. Okay, and then tomorrow or later this afternoon we have unemployment claims stateside. That comes out just before non-farm payroll tomorrow, which is another big one. If non-farm payroll gives us positive figures like we saw the previous month, then we should see the US dollar rallying. Okay, and every pair against the US dollar taking a bit of a hit, i.e. euro, sterling, yen, as we build up on that. So let's see what happens in the next, well, today and going into tomorrow. Just want to have a look at those figures. Let's have a look and see what they've got for non-farm payroll tomorrow. Non-farm. The previous figure was 243. They aren't expecting as much of a. They're expecting a bit of a pullback from that 208. Remains to be seen. If it comes out less than 208, then it's going to be very, very negative. If it comes up slightly better than 208, then it's still negative, but it's still on course of what they forecasted. So we might see price pretty much consolidating on that news. But if it comes out stronger than that, wow. I mean, if it comes out stronger than 243, it's just going to bode it's going to be very, very, very good for the US market. Let's see what happens. Until tomorrow, trade serenely.